When you're buying something new, you want to make sure it's worth your money. Here at Which, we put thousands of products to the test every single year and give you the results so you can make informed choices. So with Amazon Prime Day just around the corner, why not get yourself a Which full access annual subscription for just half the usual price? Right now you can get 50% off the usual price for a Which full access subscription, which gives you access to all of our product reviews, as well as access to the Ask Which service, where you can chat to us online for personalised one-to-one buying advice on any product we've tested. Not only that, but you'll also be able to use the Which app, and you'll get the Which magazine delivered direct to your door every month. So, to get a Which full access annual subscription for just £49.50, just head to join.which.co.uk. That's join.which.co.uk for 50% off the usual price. Offer ends on the 31st of July.
When life gives you questions, Which? Get answers.
Welcome to the Which Money Podcast, your weekly hit of money news and personal finance hacks to help make you better off. I'm your host, Lucia Ariano, and here's what's coming up this week.
In relation to the tough decisions, we're going to have to take the tough decisions and take them early, and we will.
We've got a budget likely coming up in September or October. That will give us a bit more information, hopefully, on what Labour's tax plans are, specifically on those things that they chose not to talk about and not to make pledges about during their manifesto.
Keir Starmer has already said that tough decisions, in his words, will need to be made when it comes to tax. He has also insisted that no decisions have yet, been made behind the scenes that they're keeping from us all.
This week on the podcast, we're going to discuss what the new UK government means for your finances. Now, when we last joined you, Rishi Sunak was the Prime Minister and Jeremy Hunt was Chancellor. But what are Labour promising now that Keir Starmer is at number 10 and Rachel Reeves is living next door at number 11? Well, to help us find out, we're joined by Jenny Ross, editor of Which Money, and Tom Selby, director of public policy at AJ Bell. It's so good to have you both on the show. Thank you.
Hello, great to be here.
Hello, Lucia.
Well, shall we start then? Jenny, would you like to take this one? Could we start with a little overview, how you describe what Labour was promising in their manifesto from a personal finance point of view? What was given a lot of airtime, what perhaps didn't come up as much?
First of all, I think it's probably worth saying that what wasn't promised or what wasn't mentioned in the manifesto is likely to be just as significant as what was. But we'll come on to all of that, I'm sure, in due course. I can give you a quick, overview of the key points. Significantly, from a personal finance point of view, and a relief to lots of people, I'm sure, is that they pledged not to hike national insurance, income tax, VAT, or corporation tax. There will also be a sigh of relief for pensioners, as the triple lock is here to stay, and we'll talk about that in more detail later on. But basically, that means that payments each year will continue to rise by one of three measures. There is also some glimmers of hope for first-time buyers, with a pledge to expand an existing mortgage guarantee scheme and hopefully make housing more affordable. If you have kids who are at private school, less good news. The government is planning to add VAT to those fees from September 2025, so that could see your costs increase by up to 20%. There were a few other taxes that were sort of conspicuous by their absence. So there were no such assurances made about capital gains tax and inheritance tax. So I think we'll have to wait and see what might be in store there.
Yes, there's a lot to unpick there. I mean, tax did come up a lot, understandably. Shall we kind of start there then? One thing that did come up a lot from the Conservative Party throughout their campaign was the claim that Labour would put everyone's taxes up. I think £2,000 a year was the figure widely quoted and disputed. Tom, can we shed some light on this? Can we expect an increased tax bill sometime soon?
Possibly is the slightly on the fence answer to that. Now, the Labour Ming Vase has clearly stayed intact because they won the general election, and as Jenny rightly said, they pledged not to increase national insurance, income tax, or VAT rates. Not necessarily the amount that people pay over time, because of course those thresholds are frozen, but the rates are going to stay the same. Now, when it comes to numbers that are bandied around during a general election campaign, in particular about tax increases. I think it's important for everyone listening to take those with a fairly large pinch of salt. So that Conservative document about Labour's tax increases specifically, as you say, was challenged. It was a very political document. It was based on certain assumptions about some things that had been announced and some things that people were speculating that Labour might announce. So in terms of what people listening need to look out for, we've got a budget likely coming up in September or October. That will give us a bit more information, hopefully, on what Labour's tax plans are, specifically on those things that they chose not to talk about and not to make pledges about during their manifesto. But that it's not going to be the case that people are just going to be landed with an extra £2,000 of tax overnight from Labour. We'll need to wait and see exactly how their plans work out. And also, a lot of that will depend on what happens to the economy as well. So Labour has already put huge store in the idea that it's going to get more economic growth. Now, clearly, that's been incredibly difficult for governments over the last 20 or so years to achieve. But if growth does come, then the need for any tax increases may disappear. We'll just have to wait and see as to how those plans fare.
And you mentioned tax thresholds, freezing tax thresholds from 2021 to 2028, I've got here. It's a Conservative policy. And during its campaigning, Labour didn't say it'll undo it. I suppose we don't have any more news on this, but could you go into a little more detail on what this is and why it's often called a stealth tax on workers?
Yeah, so the assumption is that policy will remain the same, so those thresholds will be kept as they are, and it's why actually the pledge around income tax it's not dishonest, but it's slightly pulling the wool over people's eyes, because as people's earnings increase, and that should naturally happen in part so that their wages are protected from the impact of inflation, which has had a huge impact on lots of people. As your wages go up, normally in normal times, the threshold at which point different tax rates kick in would go up as well. That's the normal run of things. That's how things should normally occur. But the decision to freeze those thresholds until 2028, as you say, means that people will slowly, stealthily, possibly without even noticing, be dragged into higher tax bands as their wages go up. Now, it may be that people feel a little bit more okay about that than they feel about the rates of tax going up. So if you've had a big pay rise and then you lose a little bit of that to tax, then you might still be happy about the pay rise. You might not notice actually the government's taken a bit of extra money from you, but the impact is quite significant. So if you look, for example, at the personal allowance, so that's currently at just over £12,500, £12,570. If that had been adjusted in line with inflation and taken into account some assumptions between now and 2028, then that figure would be closer to 16 grand.
Gosh, that's a lot higher than I thought you were going to say.
About an extra £3,500. Now, that's by 2028, so there's a few extra years to go, but that's how long we're expecting it to last for. So you've got an extra £3,500 there that would have been taxed at 0%, that under the current policy, and the policy we assume is going to remain in place until 2028, won't benefit from 0% tax and will be taxed at 20% as well. So it is stealthy. It's quite difficult for people to notice sometimes, as I say, because the wages will be going up. But make no mistake about it, the government is taking more of your income in tax as a result of those freezes.
And I think it would be quite a surprise for Labour to undo that as well. It's just not in a position really at the moment to make that move. Keir Starmer has already said that tough decisions, in his words, will need to be made when it comes to tax. He has also insisted that no decisions have yet, been made behind the scenes that they're keeping from us all. But I don't think it would be a big surprise if further sort of tax hikes or tax tinkering, shall we say, comes up at the autumn budget. But yeah, I don't think those frozen tax thresholds are going to melt anytime soon.
Well, shall we widen out now then? A few weeks ago on the podcast, we talked about how experts were expecting the markets to respond. It was, of course, a landslide victory for Labour. What kind of impact has this had, if any? Jenny, do you want to start here?
Yeah, I mean, it's a pretty simple answer here. Financial markets have reacted well. I think that's largely to do with the fact that they famously dislike uncertainty, and there was actually quite a lot of certainty about the outcome of the election. So there was a slight rise in sterling against the dollar. Both the FTSE 100 and the FTSE 250 were up.
It is good to hear that it seems to be quite a promising backdrop at the moment. Well, shall we move then on to pensions now? So Labour promised to keep the state pension triple lock. We've spoken about it quite a lot at length on the show. This is good news for pensioners, isn't it, Tom? Can you remind us a little bit about what it means?
Yep, sure. So very good news for pensioners for now. So the triple lock is the pledge to increase the state pension by the highest of average earnings growth inflation, or 2.5%. So the new state pension, that's the state pension that's paid to people who built up pension rights post 2016, is worth just over £11,500 a year today. And so by having that triple lock in place, then the value of that state pension will keep on increasing, at least in line with inflation or earnings. And when both of those are low, that 2.5% underpin will kick in, which will mean that pensioners still get a real terms increase even when inflation or earnings are low. So those in work, for example, when the economy is struggling, might not be getting pay increases, but pensioners, in terms of their state pension, will continue to benefit from those increases. So it's one of those. I've got a slight bugbear with the state pension triple lock, and it's not because I think our state pension is particularly generous. Actually, if you look around the world, it's not necessarily as generous as some other countries, although there's various other factors that go into that. It's the fact that it's this kind of random ratcheting mechanism for the state pension, where no politician, and we saw this in the general election as well, no politician has said exactly what the aim of this policy is. So in a way, having a triple lock suggests that the government, and now the current government and the previous government, are admitting that our state pension's actually too low, because it's promising above earnings and inflation increases when those two are low. But it's not setting out a plan to increase it to a certain level. They're just saying, we'll keep the triple lock, it'll keep on increasing in real terms at random, and we'll worry about essentially the state pension another time.
And Tom, what about the old tax elephant in the room here? Because obviously the Conservatives went one step further than Labour in their manifesto, in that they committed to keeping the triple lock, but they also were proposing something called the triple lock plus to address the fact that more pensioners are likely to be paying income tax as the state pension rises. What do we think will happen there?
Well, I think it's fair to say that was a political tax trap that was set by the Conservatives as part of the election campaign. Now, clearly, the consequence of having a triple lock, which guarantees increases at certain levels to the state pension, combined with freezing of the tax thresholds, which were introduced under the previous government, of course, means that eventually the value of that full flat rate state pension, so just over £11,500, eventually is going to go above the personal allowance threshold of just over £12,500. And so when that happens, someone in receipt of the full flat rate state pension would be subject to income tax on that amount. So at the moment, it's below that level. As soon as you go above that level, then people in receipt of that full amount would be having to pay income tax. So that was the tax trap that the Conservatives were talking about, which is why they proposed this triple lock plus idea. So the idea that you would peg the personal allowance of pensioners to the triple lock as well as the state pension. It's something that the Labour government is going to have to address. It's worth pointing out that there actually are people who built up state pensions under the old system who will already be paying income tax on their state pension. So these things are never quite as simple as they're made out, particularly during a general election campaign. But it is one of the challenges of having a triple lock policy in place at the same time as having frozen tax thresholds is inevitably everyone, whether they're working or whether they're in retirement, is going to be dragged into higher tax bands, and pensioners are no exception to that.
Labour also made a commitment around the minimum wage to help lower paid and younger workers, so those who might not qualify to be automatically enrolled into a pension. What's changing there?
So yeah, in their manifesto, Labour has basically pledged to extend the scope of the full minimum wage so that workers will receive it from the age of 18 rather than 21. Under the previous government, so the Conservatives had already bumped up that amount from £9.50 an hour to £11.44 an hour. That happened a couple of years ago. But yeah, Labour wants to go one step further and basically reduce that qualifying age from 21 to 18. And actually, Tom, I saw some very handy calculations by none other than AJ Bell, which show that for a full-time worker on the average UK wage, that'll effectively mean more than £5,000 a year boost to their salary.
Well, we've covered so much ground already, but still much to cover. After a quick break, we'll be looking at how your household bills might be changing, plus those ambitious housing targets and how they could impact first-time buyers. That's next.
Like listening to podcasts just like this one from the team at Which? Well, we've got some good news. All our podcasts are now available to listen to on YouTube and YouTube Music. So whether you like listening to Get Answers, Which Shorts or Which Money, all episodes can now be listened to directly on YouTube or through the YouTube Music app. To find them, just search for the podcast you'd like to listen to. YouTube's additional functionality also means that you can now read along with subtitles as you listen. Don't panic though, all Which podcasts are still available to listen to elsewhere too. So wherever you listen, we'll see you soon.
Welcome back to the show. Now, before we get into it, I just want to remind you about the new series we've just launched here on the Which Money podcast feed. It's called Which Money Shorts, and each fortnight we're giving you a taster of some of the Which Money magazine. Our fantastic team of journalists work all year round to bring Which Money subscribers reviews, investigations and features in the bi-monthly magazine. So every other Monday we'll be handpicking our favourite pieces and bringing them to life right here on the Which Money podcast feed. We've already released 2 episodes and the next one drops this coming Monday, the 15th of July. Now, back to today's show, and let's talk about what Labour's win means for mortgages. Unsurprisingly, this is something a lot of people want to know about. Search queries for Labour mortgage rates have risen by 800%, I've got here. Tom, what do you make of it?
So I guess the first thing that people are going to be looking out for won't necessarily be in the control of the government. It's going to be the Bank of England's interest rate decision. Now, clearly people in particular who are already in receipt, who already have mortgages where those mortgages are pegged to the base rate, will be hoping to see a cut in interest rates. I think most people are now expecting interest rates to be reduced now that the inflation has returned to normal, as Rishi Sunak said over and over again during the general election campaign. So that will be a relief to a lot of people, both who already have a mortgage and who are looking to get a mortgage, because it should hopefully be cheaper for them. Over the longer term, Labour has said that it wants to encourage more longer-term fixed-rate mortgages to become available in the market. Now, clearly, the thinking here is that if mortgage providers, mortgage lenders offer more longer-term fixed-rate mortgages to people, then potentially the affordability of those mortgages on a monthly and annual basis will be a little bit easier for people, and that will allow more people to get on their housing ladder and afford a mortgage. But I think actually the biggest thing that Labour could do, and we've already heard some noises from them around this, is to build more homes. So the huge challenge in the UK over the last 15, 20 years is that we just haven't been building enough homes for the number of people who live here. And so as a result, if you don't build enough homes and demand goes up, then clearly the price of those homes is going to go up, and younger people are going to struggle to get on the housing ladder. So I think all eyes will be on those planning reforms in particular. Now, the challenge, I guess, for anyone who's listening to this, who's thinking, I want to buy a house right now, is that it's unlikely to deliver cheap housing for you overnight. This is something that's going to take years to address. And so there are no easy answers, I don't think, for people who are struggling to get that deposit for a first home or are struggling to afford a mortgage. But it's clearly something that is right front and centre of what Labour is trying to do in government.
And is there anything that Labour might be doing that could make it easier for first-time buyers, people want to buy a home sooner rather than later?
I mean, Tom's already touched on some of it in that obviously supply and affordability are two huge barriers to prospective first-time buyers. So, the big house building push is one way of tackling that. So, the headline pledge is building 1.5 million new homes in England. And Rachel Reeves has already given a speech sort of elaborating on how they'll try to meet that super ambitious target, all about reintroducing mandatory house building targets for councils, as well as, cutting up some of the planning restrictions. I guess the other thing that's particularly relevant to first time buyers and could help give them a leg up onto the property ladder is Labour's pledge to bring in what it calls a permanent and comprehensive mortgage guarantee scheme. Now, this is probably familiar to many regular listeners in that it was a scheme that was actually introduced after the pandemic by the Conservatives to encourage lenders to offer 95% mortgages, so mortgages that would require a smaller deposit and just make it that much more affordable for first-time buyers. And the incentive for lenders there is that that they'll get some compensation if borrowers miss compensation from the government, that is, if a borrower misses a mortgage payment. Now, that was designed to be a temporary scheme with an end date of June 2025, but Labour clearly wants something like that to stick around permanently. I think 80,000 is the figure. It wants to help get 80,000 young people onto the housing ladder in the next 5 years as a result of that. I guess the flip side here potentially is that, while it might be, sounds like it will end up being easier to get a low deposit mortgage, you could, as a first-time buyer, end up paying more stamp duty if the noises are to be believed. So the threshold at which you pay stamp duty if you're a first-time buyer is £425,000, and that was increased by the Conservatives a couple of years ago and was due to be, again, it was another temporary thing. It was due to be taken back down again in April 2025. It sounds like Labour will continue with that, and it will come back down to £300,000. So again, just something else you need to factor in if you are hoping to get onto the property ladder.
Yeah, I think one thing to keep an eye out again in that budget, which we're expecting in September or October, will be the lifetime ISA. So that's the product that was created by the previous government to try to give people a helping hand in buying their first home by giving them a 25% bonus worth up to £1,000 every year if they save in a lifetime ISA, and then being able to access that money tax-free if they use it for a first home, as well as in other certain circumstances reaching age 60. Now, there's been a lot of pressure on government to improve that product. So, for example, to increase the minimum property value that it can apply to. So it's currently £450,000. That's not changed. It's a product that was introduced, I think, in 2016, 2017. So it's possible that the government could look at that. They could also look at the early exit penalty that's applied to that product. But they've got a product there that could work for first-time buyers, that could help people get a leg up onto the housing ladder, of course, as long as you sort out the supply problems at the same time. But that could be due an upgrade as well. So one to look out for, I think, in the budget. So
it's a lot for first-time buyers. What about renters? Can we just touch on renting for a moment? Has there been any news that might affect them?
The main point here is all to do with legislation known as the Renters Reform Bill. Now, that was actually going through Parliament before the general election, and would end up scrapping what's called Section 21 notices, so that they're better known as no-fault evictions, basically where landlords can evict tenants without having to give a reason. Labour is absolutely committed to pushing through with that. It wants to immediately, it says, abolish those evictions to prevent private renters being exploited and discriminated against. The potential downside to that is that I've read that there seems to be a surge in those notices taking place before they're fully banished. So that could affect renters in the short term, but in the long term, those no fault evictions should come to an end.
And can we touch now then on another big household bill, energy? So, of course, over the last few years, we've seen our gas and electric bills go up and up and up. So what do Labour have in the works to tackle this? And also, what about Great British Energy? Can we hear what this is and how long it might be until we see some of the benefits?
Yeah, so Great British Energy is Labour's great big offer to people in terms of their household bills. So the thinking and all the talk around Great British Energy has been that if you can encourage more sustainable energy to be delivered to households, then that will be more efficient over the long term, and so that will pull people's household bills down. Now, that may be the case. We'll have to wait and see. But one of the challenges, of course, with energy bills is that the UK remains pretty vulnerable to what happens overseas. That's going to continue to be the case in the short term. We, of course, saw that in relation to the war in Ukraine. And so the government's looking to, I guess, ensure that we've got more energy security, so we're less vulnerable to those changes in gas prices overseas, which then filter down into our energy bills. But in the short term, it's still going to be a lot of those external factors, I think, that are going to impact on exactly how much we're having to pay every month.
Is there any kind of timeline on how long this might take?
So Labour's said it's going to establish Great British Energy pretty quickly. It's one of the core things that it was saying in its manifestos, one of the things it wanted to deliver, both in terms of its sustainability agenda, but also generally in terms of showing that it wants to get people's energy bills down. Now, how long that takes to translate into any improvements in people's cost of energy is kind of how long's a piece of string. We'll have to wait to see. We'll have to wait to see if the policy's effective, but we're likely going to be talking about years rather than, seeing an impact in the next couple of months, unfortunately.
Well, to wrap up today's show then, can we talk wish lists? Jenny and Tom, is there anything on Which or AJ Bell's wish list for the new government that hasn't been mentioned quite yet?
Yeah, I can start. I mean, this won't come as any surprise to regular pod listeners, but here at Which, we would really like to see fraud prevention being prioritised. It is by far the most common crime in the UK now, and fraudsters are just endlessly exploiting the opportunities offered by big tech to reach victims in new and sophisticated ways. So, I mean, it's encouraging that Labour has acknowledged the massive problem it poses. So it has pledged to introduce a sort of broader fraud strategy that would look at tackling sort of online and public sector fraud. It also wants to make tech companies liable to reimburse victims of fraud. So online fraud, that is. So good to see it recognising the role that those tech firms have to play. So we would like really to see a new dedicated fraud minister that can really lead from the top, set that strategy, and also for the government to lead a task force that includes public and private sectors to share intelligence, because this is part of the problem. It's so fragmented. There are so many players who have a part in preventing fraud and in sharing data that will allow that to happen more smoothly. But it's just way too fractured at the moment. So yeah, we want to see that being much better joined up. So please, Keir Starmer, if you're listening, fraud, please. Fraud prevention, right at the top of your intro. Thank you.
I assume he's listening. I think that's a really good shout, Jenny. I think it's one of those areas where clearly there's only so much governments can do to protect people from fraud. It's global and people have to take some responsibility for themselves, but equally governments do have a convening power to kind of bring together all those different stakeholders. So in industry, tech companies, regulators, all those different people who can play a role in protecting people, they need to be brought together. And as I say, less fragmentation, as you say, would be a good thing. A couple of selfish ones from me. So firstly, we're really positive about the possibility that we could get some genuine radical ISA simplification from this government. So the previous government looked at some tweaks around the edges around ISA simplification and said they thought it was potentially a good idea. They then came forward a few months later and proposed a new type of ISA. So it didn't really suggest they were particularly committed to that agenda. So we've got 6 different versions of ISAs at the moment, each with slightly different aims, different allowances, really confusing picture for consumers, particularly first-time investors. So we think if they could strip away some of that complexity, ideally try to combine those products into either one or perhaps 2 different versions of ISAs, then that would be a really good thing for consumers and a lot easier for people to make those decisions to invest for the long term. I think that would also support this capital markets agenda that they're looking at with pensions as well. So there's a real possibility for a win-win for the government there. And Labour have said that they're in favour of ISA simplification and encouraging more investing in stocks and shares ISAs. So I'm quite positive that we'll get something from Labour on that at some point, probably not an immediate priority, but something at some point around ISA simplification. And then I think on pensions, a slightly boring one, but it would be good, particularly in relation to pensions taxation, if we have at least some stability and predictability. So the government, Rachel Reeves in particular, has said that she's very much in favour and looking to set out a platform of stability for policy making generally and for government. There's no area that I can think of that is crying out for some stability more than pensions taxation. We've had changes to the lifetime allowance over and over again, lots of cuts. We then have the lifetime allowance abolished, which you kind of wonder, is there any real strategic long-term thinking going on here from government? It really gives people the sense that the rug's about to be pulled from under them, which is not a good thing when you're asking people to lock away their money, albeit with tax advantages attached. But people are having to lock away their money for 20, 30, 40 years in a pension. I think it's not too much to ask that the government of the day isn't constantly tinkering or considering tinkering with all the different allowances that exist. So a bit of simplification of ISAs and a bit of stability for pensions would be a really good thing, I think.
Well, I really do hope that we see some of this stuff addressed. I should mention that you can sign up to our free Scam Alert service. It's a weekly email newsletter that makes you aware of the latest scams doing the rounds. And we can pop a link to that to subscribe in the description of today's show. Well, thank you both so much. It's been a brilliant show today. We've obviously covered so much ground and it's been so good to have you both on the show. So thank you.
Great to be here. Thank you, guys.
Cheers. Thank you.
Well, a huge thank you again to Jenny and Tom for coming on the show today and to you for listening to this week's episode of the Which Money podcast. If you enjoyed today's show, please do hit subscribe to make sure you catch our new episodes as soon as they drop. For daily money news and advice, you can find us on social media at Which Money and online at which.co.uk/money. And we also have a free money newsletter, which is delivered to your inbox every Monday. To sign up, visit which.co.uk/money newsletter. This episode of the Which Money podcast was written by me, Lucia Ariano, produced by Rob Lilly-Jones, and produced and edited by James Rowe.
Want to stay ahead of fraudsters and across the latest scams? At Which, we helped prevent an estimated £1.8 million in scam losses last year thanks to our Scam Alert newsletter. And each week we provide more information on the latest scam activity, helping protect you, your family and your friends. Stay in the know and avoid falling victim to scammers by joining over 450,000 people already signed up to our free Which Scam Alerts. To join them, head to which.co.uk/scamalert and sign up today.